G'day traders, welcome back to another update for natural gas and the ETFs. And the charts today are showing still bullish momentum, although I've got a slight retrace on the daily at least. We're going to include some back testing. Before you go any further, make sure you hit that like and subscribe button to support the channel. It'd be greatly appreciated. As of today, June 23rd, in terms of weather and demand, there's strong summer demand ahead. EIA forecast Henry Hub prices averaging $4.30. That's for a million British thermal units into second half of 2025. A sharp rise from about $3.12 in May, driven by cooling related power burn as temperatures climb. Record US production supporting supply. May US output hit 106.6 BCF, the highest on record, helping to refill inventories. Though storage injection pace may slow as demand picks up. Global tightness keeps prices elevated. IEA notes persistent tight supply-demand balance due to low Russian piped gas exports and rising LNG imports into Europe, offsetting sluggish demand growth and maintaining firm global fundamentals. Geopolitical upside risks remain. Middle East tensions around the Straits of Hormuz are keeping LNG and gas prices supported, with disruptions to oil and gas shipping as the major risk factor. So as always, we look at the three-step rule, and the first step is we look at the trends on the long term. So we've got the monthly, the weekly, and the daily. So looking at the monthly, you can see the prices above the moving averages, and so is the CCI above its respective moving averages. So bullish momentum on the monthly. The weekly likewise, both the price and the CCI broken higher through their moving averages, so bullish momentum. And on the daily as well, the price is still above, but notice the CCI is pulling back towards that moving average range. I'll show you the back testing in a moment, but basically if you're trading long on the daily, you'd be ready to get out of the trades as soon as that touches that moving average range. But going back to the monthly for a moment, the second step or second rule we look at is any divergence. Now, there's no divergence currently shown on the monthly, and that's a good thing, I suppose. But also, we also look at these fair value gaps. Now, you'll notice here there are these red areas, these I've marked. They're basically fair value gaps, which means unfilled orders. But what happens usually is the price retraces back to that area and fills those areas. Otherwise, you can see here all these little candles with wicks. Those fair values have been completed or filled, if you like. And the way you measure a fair value gap, if I zoom in for a moment, for those new to fair value gaps, you take the low of the previous, so let's say we're looking at this candle here, you take the low of the previous candle versus the high of the candle after that candle we're looking at. So for that candle, all those areas in there, all that body of the candle in there has been unfilled orders until such time it reaches this one here and it fills about 25%. Then the price retraces back and it starts rising a bit. And if I scroll across, you can see there that was filled up to about almost or half of that of those orders until more recently. You can see there that completely filled that fair value gap and then filled about half of that area as well. So where we are at the moment on the monthly, we've got a fair value gap down here, which means at some point, and again, don't place short orders on this, we're just simply looking at where potentially the price will retrace back and fill those with at least a wick of a candle. I'll cover that in a minute on the lower time frames. On the weekly as well, we look for any divergence. There's no divergence that I can see at the moment. And then the fair value gap is down here as well, which is unfilled. All these other ones in here have been filled with those candle actions preceding those, filling those areas. So this is yet unfilled, so we may see a price drop at some point, which also coincides with this monthly period. On the daily, likewise, we've got another period down here, haven't been filled yet with a fair value gap. Also, as far as divergence goes, there's no divergence that I can see currently on the daily. Now, if we look at the intraday, so even if you're trading on the daily, you still look at the intraday chart. And this is the 1 hour chart we've got here. And on the left here, I've got the daily as a reference. So you take predominantly long trades, as I said, and you get ready to close out your trades as soon as that touches that moving average band if you're trading on the 1 hour time frame. So here, for example, we've got a bullish momentum. So you would have been going long according to the daily trend. And you would have closed it out for a couple of reasons. First of all, if you'll be closing it out shortly if that opens up tomorrow and it touches that moving average on the daily. But also notice here in the last video we drew this small area of a bearish divergence, lower highs versus higher highs in the price, and I've drawn a target. Now what it did, it retraced slightly to the downside, but it didn't actually break into that. Instead, the CCI kept dropping, the highs kept dropping versus the highs on the price kept rising until such point at that point there. So what we do is we extend it to that high, and we extend that area to that high there. So that's a longer term bearish divergence on the 1 hour time frame. And you would have closed out at the very latest, you would have closed out your positions once that price broke below that moving average range and the moving averages started bending down. So at the very latest, you would have closed it out there. And that's an early exit compared to where we are on a daily as well. Now at the moment on the 1 hour time frame, it's bearish on the price chart and also broken to the downside on the CCI as well. Next thing to look at is the back testing. And what I've done here is I've drawn the stop loss approach and the average down approach here. And I've started it back here around the 26th of May, which is back in this period when the price broke. And I've deliberately left that in there, bullish trades. Now you wouldn't have been trading this period here because the CCI is broken below the moving averages, and so is the price. So you would have gone long again in that period, gone during that period long, and then closed out again during that period. So I've left that in there deliberately to show you the effects of what happens if you're trading on the 1 hour time period. So that's why I'm saying, emphasizing, you close it out when it touches that moving average range on the daily. But here, for example, you would have got out at the very latest around about the 27th of May, around this period. The stop loss approach was in the red. The average down approach is slightly above in profit. You had a bit of a drawdown there because of that bearish momentum. Again, you would have avoided that if you not traded that period. I've left it in there deliberately for that reason. But also notice here you've got some bullish and bearish divergence. So you pay attention to those on a smaller time frames when you got higher lows versus lower lows on the price and so on. And more recently, as I said, on the 1 hour time frame, you got this bearish divergence, and you would have been closing out your long trades already had it broken below that moving average range like it did around this area. But theoretically, I just stated in the whole overall trades, you'd be breaking even on the stop loss approach, and you'd be up about 19,000 on the average down approach. Remember, I've got those +1 videos you can reference at the in links in the description below if you want to learn how to the finer mechanics of how to trade those average down approach with the indicators. So for BOIL on the monthly, it's below the moving averages on the price. There's no CCI for it. But before we move on from the monthly, notice up here we've got these fair value gaps that haven't been filled yet. So we may see a reversal on where we are at the moment for BOIL at some point. And this could take years to play out. Doesn't mean it's going to happen tomorrow. So just be aware of that, but that's a very long-term play. On the weekly, likewise, we've got these fair value gaps haven't been filled yet. But notice we've got this bullish divergence on the CCI versus lower lows on the price. That's a very long term. So it started in 2023 and it finally broke higher here late last year, but it's actually fallen below the moving averages again. So somewhat neutral at the moment on the weekly time frame. On the daily as well, we've got these fair value gaps up here. That was a response also. We saw a decline from that resistance at 107.11 because of this bearish divergence, and that's eventually broken off and leveled out now. So currently in a slight bullish momentum on the daily above the price and the CCI moving averages. Now if we go to the intraday chart, looking at the 1 hour, again this is the daily here, the 1 hour has actually been bullish for the last few hours since around about the 13th of June, and it's finally broken below the moving average range of the price and the CCI. So at the moment, bearish momentum. But again, remember, the rule is you want to make sure you're going long on the smaller time frame in accordance with the daily trend, and the daily trend is currently showing bullish momentum, so don't go long yet until that breaks above the price and the CCI moving averages. So KOLD is showing a bearish momentum at the moment on the price, but notice these massive fair value gaps higher up here around the between 100 to almost 1500 almost up there. So we might see a bounce at some point. Again, that's a very long-term play on the monthly. On the weekly, we've got another bearish divergence. The price and the CCI broken below the moving averages, give us a bearish momentum. And you can see that massive fair value gap up there that hasn't been filled yet. That also corresponds with the monthly. They don't always match, by the way, but this does in this case. And on the daily, you can see there it's broken below the CCI and the price moving averages, giving us a bearish momentum. So taking only short trades on KOLD at the moment. If we go to the intraday chart, the 1 hour chart, again, you can see they're just broken up into those moving average ranges. So it's giving us a bullish momentum on the hourly. But remember, the rule is always go in the direction of the higher time frame. So going short only when it breaks below the moving averages again. So don't do anything at the moment. If you were going short during this period, you should have taken your profits and closed out your positions once they'd hit that moving average range of the CCI. Okay, finally looking at UNG on the monthly, we've got the price is below the moving average and the CCI is above, so that's giving us a neutral signal, and that's probably more bullish than bearish, I'd say, because you've got this bullish divergence, higher lows on the CCI versus lower lows on the price, and that's actually bounced. And I've drawn a target out. This blue square is actually the target for the bullish divergence. Hasn't nowhere near it at the moment. That could take years to play out, by the way. And that also coincides with these fair value gaps as well. So we may see the price go up to that level at some point for UNG. But at the moment, somewhat neutral, I'd say, neutral to bullish, a very slight bullish move. On the weekly, likewise, it's breaking up to towards a neutral positioning. It's still below the moving average of the price, but broken up slightly into that moving average range on the CCI, so giving us a slight bullish momentum. And that's also a result of this bullish divergence we had on the weekly. And again, these are independent from different time frames. Again, there's that fair value gap at the top there. So the 1, 2, 3 strategy, the trend, divergence, and any fair value gaps that we look at. And lastly, on the daily as well, we've got this break above on the price moving averages, and also the break above on the CCI moving averages. Last day of trade, we had a bearish candle, and you can see there the CCI is slightly bending down, but somewhat at the moment it's still bullish if you're trading on the 1 hour time frame. And if we go to the 1 hour time frame, let's look at it in the micro level. We had back here where there's bullish divergence, and it broke up into that moving average range. And that was also a fair value gap. You can see there it broke down and filled that fair value gap. And we've got some more gaps here. You can see those. And that's the first one that's been filled since our last video. And we may very well likely see a price retrace to the downside to fill these other gaps down here. But at the moment, bullish on the daily, so we only take long trades. We don't take short. But at the moment, the price is showing bearish momentum with the CCI below. And the price is in that moving average range, still somewhat neutral at the moment. Remember, if you're new to trading and you find some of these strategies or indicators we're mentioning, if you want to get more information on those, go to the +1 videos, and there we put those out frequently, and they're a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our videos as well. And if you enjoy the content, hit that subscribe and like button, but also if you want to subscribe and get some more information, some other benefits, go to the Patreon page, at least on the free trial, where we publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.